3 important tax points to consider upon starting a new business. You wouldn't imagine the amount of hard work you need to do to manage a business. You will find yourself on top of several strategies such as customer acquisition, competition, customer support, and financial aspects as well. So, while you are heavily focusing on the business aspects, trying to run your business successfully, you might find yourself overlooking one of the most important points, which is the tax compliance part. And here we should highlight that tax non-compliance now comes at a larger price than before. And also, efficient tax planning starts before the incorporation. So, business legal structure, tax compliance, and business future exit. Those would be the most important tax points to consider upon starting a new business. Hello everyone and welcome to the Tax Gate. Hit the subscribe button and let's go through each one of them. Let's first start with the business legal form. Business legal form or structure is a governmental classification which regulates the legal aspects of your business. Also, tax compliance requirement for any business would depend on several factors, and business legal structure would be the most important one of them. Your business legal structure can significantly impact your tax burden, and that's why choosing the right business structure would be one of the most important decisions you would make. And here let's highlight some common business legal options most companies would consider upon starting a new business, and such would include the following: sole proprietorship, and also partnership, corporation as well. And finally, the limited liability company. Well, now let's move to the next point, which is the tax compliance. Business owners are required to follow the tax laws of the country where they operate, and sometimes they would be required to follow the tax laws of other countries as well in case they have any presence there. And here we should highlight that to run your business smoothly, then you need to have a basic understanding of the applicable tax laws to comply with them in a timely manner. So, at the end of the day, it is your duty as a taxpayer to educate yourself on all tax obligations that you need to fulfill. And as we highlighted at the beginning of our video, tax non-compliance now comes at a larger price than before. Well, so how we can be a tax compliant? And here we would mainly highlight the following points. First, tax registrations. As any business would be required to be a tax registered first in order to be allowed to function in a given market. And being registered for tax purposes would have a significant impact on your business, taking into consideration the tax filing burden and the related potential consequences of non-compliance that the business may face. Also, another point to be highlighted here, which is the tax filing. Once you are a tax registered, then several tax returns with the relevant deadlines and filing obligations would be considered depending on the jurisdiction where you operate. Also, bearing in mind that such should be processed on a timely manner to avoid any tax challenges such as tax fines and penalties being non-tax compliant. And finally, tax payments. Similar to tax filing obligations, failure to proceed with the tax payments associated with the submitted tax returns on time may result in late payment penalties, which can have serious consequences on your business. Good, so we went through the business legal structure and also the tax compliance part. Now let's move to the last point, which is the business future exit. Smart businesses would plan for a tax-efficient exit even pre-incorporation. And here tax-efficient exit would mean the business ability to minimize the tax consequences through efficient tax planning in case of future exit, so it is the business opportunity to have a profitable exit. And such would involve strategies to reduce the tax liabilities that may arise against the sale or transfer of the business assets. And here it is important to highlight that understanding the exit tax liabilities can significantly help businesses to choose the right decisions and accordingly to optimize their financial outcome. And one of the most important tax types that would be considered upon business exit would be as follows: capital gain tax on the profit realized from the sale or transfer of assets such as stocks and real estate. Also, income tax that may apply to certain transactions upon the sale of the entire business. And last but not least, double tax avoidance treaties should be taken into consideration, which may reduce or eliminate tax liability in specific situations, which can significantly impact exit tax planning. Finally, we should highlight that further tax aspects should be taken into consideration upon starting a new business, enabling you to run your business smoothly, efficiently, and successfully as well. Like and subscribe if you would like to see more interesting tax videos, and thanks for watching TaxGate.